Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Headline from the Bloomberg Professional Service: Johnson & Johnson has reached a Washington state opioid settlement pact. Also, right now we have got Bitcoin falling below $40,000, $39,930 right now on Bitcoin. It is an up day on Wall Street. We are off session highs. However, S&P right now up 7, gain there of 0.2%. Dow Industrials up 84. That is a gain now of 0.2%. Nasdaq up 34, also higher by 0.2%. 10-year yield 4.10% with a 2-year right now at 4.38%. Gold down $9.50 the ounce to 2019, drop there of 0.5%. While West Texas Intermediate crude up 2%, 74.90 for a barrel of WTI. Another busy week for earnings. This week we'll be hearing from Netflix tomorrow, up now by 0.9%. Tesla Wednesday down by 2.6%. Intel Thursday lower now by 0.5%. Again, recapping, we got an up Monday here with the Dow, the S&P, Nasdaq all in the green. Bitcoin though falling 4.4%, 39,990 right now on Bitcoin, back below 40,000. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, there are two stocks on our radar this afternoon, one going way down, one going up. And that is, first of all, ag trading giant Archer Daniels Midland. Tim, plunging the most ever today.
Yeah, this after it suspended its chief financial officer and cut its earnings outlook pending an investigation into its accounting practices. For more, let's bring in Simon Casey, Bloomberg News managing editor for Energy and Commodities Americas. He joins us here in the Bloomberg studio. So, Simon, what do we know about the accounting probe here? We know that it involves the nutrition unit. They make ingredients for animal food, for human food. What can you tell us?
What else ADM said, and this came out Sunday evening, which always is a bit alarming.
Lucky
when companies,
you, huh?
Yes, lucky us. Weekend.
That's how it works.
End of my weekend. No, I'm joking. It was fun.
But it's serious
in a weird
right?
way. They said it, as you point out, the nutrition unit. So just back up a little bit. ADM is this big agricultural trader. It's been around for over 100 years. It's best known for trading, buying and selling corn, soybeans, wheat. It also has these downstream businesses. The nutrition business is something they've tried to build up substantially over the last decade or more.
Yeah, they made a big acquisition, right?
They've made several big acquisitions, particularly one back in 2014, I think it was, Wild Flavors, $3 billion, the biggest deal they've ever done. And they've been trying to grow this business, but they kind of hit a bit of a wall. It hasn't really fulfilled the highest expectations. So with that background in mind, they then said yesterday, we've suspended the CFO. We are looking specifically at this unit, not the trading business, not the core business, but this ingredients unit, as it's called, and inter-segment transactions, which suggests transactions between the nutritions unit and other parts of the business. Other than that, for sure, we don't know anything else. Also, should point out, they said they were acting on a request from the SEC for certain documentation. So
is that the SEC, Simon, just saying, hey, this doesn't quite make sense. Can you help us here? Or when the SEC does something like this, should we assume it's something a little bit more serious? Because the stock, I'm looking at it, down 23%.
Those are both ways of reading it, quite frankly. The SEC is not saying anything, nor would he expect them to do so at the moment. So, there are situations these situations, it could plausibly be, as you say, genuine curiosity looking at the company. I just want to figure out what's going on here. Or it could be a whistleblower situation. I have to stress that's pure speculation. Don't know, but
the CFO was put on leave.
Yes.
Again, we don't want to read anything into it, but that's a pretty serious move.
It's a very, very serious situation, to be sure. And there is an internal investigation, and the stock has plunged by about 25% today. So,
and that's where I wanted to go, because investors are certainly saying that it's serious. What are analysts saying, and that could be potential outcomes here? Because investors are certainly voting one way.
Well, we saw a slew of downgrades this morning from various banks and sell-side analysts. We saw, I think I looked at the Stifel notes that was put out earlier. They cut their stock price target by half, which gives you some indication of how bad this is. Yeah, like I say, this ingredients unit, does not account for most of the revenue of the company, but it trades at a different multiple to the rest of the company, because the trading business is huge in terms of revenue and general sort of corporate activity. But it's a very volatile business, and this is the whole idea why the company was trying to get away from its dependence on this business and go into something a bit more predictable, a bit more value added, and the idea being you then juice the company's valuation. Now, if that business is going to have to be sort of re-rated considerably, who knows where the earnings will end up. And by the way, they've postponed their earnings. They were going to be for next week.
Right.
We don't know when they're going to be now, because they're furiously trying to figure out how much where their earnings actually ended up last year. They don't really know.
Simon, one last question, 30 seconds here. So for investors who are watching, and if you're trying to be upbeat on this stock, it's a hard thing to do, certainly when you look at the trade today. One day's trade. Having said that, what's the takeaway, or what's the date to maybe, or thinking around this? Like, what are you going to be watching when it comes to this stock? And
it's very hard to give anybody a date, because they offered no date. I don't know how long these kinds of investigations will really go on for, but I think it's safe to say investors need an answer and expecting an answer. And in the next few weeks, they're going to expect some sort of updates from the company.
All right, we're going to leave it on that note. Simon, thank you so much. Simon Casey, Managing Editor for Energy and Commodities Americas here at Bloomberg News. As we mentioned, ADM shares right now, folks, down about 23%, Tim.
And now to the other stock that's on our radar today. Macy's, higher after the company said a $21 per share takeover offer from Arkhouse Management and Brigade Capital Management lacks, quote, compelling value. Arkhouse CEO and managing partner Gabriel Kahan on Bloomberg TV a little earlier, saying he is hopeful that it can increase Macy's offer and that it has close to 50% of equity to close the Macy's deal.
All right, so let's get to it. As we said, Macy's up about 2.6% in the trade, off its highs of the session, but still trending higher. We've got with us Bloomberg Intelligence Senior Retail Analyst Mary Ross Gilbert. She's joining us from our LA bureau. All right, Mary, what do we need to know here? Macy's has got to feel good that it got an offer, but they're not very happy with it. Is it just they're not happy at this price, or I don't know? How are you thinking about it, and how are you analyzing it?
Yeah, so one of the things that we've done when we've looked at the department stores is we took the time to value the real estate. And so for Macy's, we valued the real estate at $8 billion. So when you look at this transaction, and this transaction, it's the $21 per share, that actually works out to a total enterprise value of about $8 billion. So it's basically saying that they're going to get the retail business for free. So that's how we look at it. But it's also a little more complex when you think about how do we extract the value from that real estate. And this was something that was explored in the past by previous, investors. For example, Starboard back in 2016 had proposed taking Macy's real estate and spinning it into another entity. And at that time, they were saying, hey, maybe the stock is worth something like $60 a share. And at that time, Macy's stock was trading around 40. In this instance, you have our house who's saying, yeah, we might raise our bid.
Right.
Macy's is very constructive here. And, they've obviously brought in all their advisors, which included real estate advisors, and they looked at it very closely. And I think that, they need to see something more serious.
Hey, Mary, when I hear about a takeover and spinning off real estate, I think of Eddie Lampert and Kmart and Sears and all that good stuff, which did not work out well.
I was going to say, how did that go?
Not so well. Apples to apples, apples to oranges. We shouldn't even be thinking that here.
No, that was a total disaster.
Okay.
That's
fair.
And look, if you look at the different investors that have targeted real estate, so for example, more recently you had Franchise Group, which made an offer, and they do have a portfolio of companies, and they're retail oriented. So when they went after Kohl's, yes, there's the real estate value, but they were also interested in the retail concept and the potential there. And they, of course, had a serious bid, and then Kohl's rejected it. And now the stock's down about 60% since that time.
Hey, Mary, JP Morgan analysts put a 50-50 odds on this deal actually happening. What are your odds? Do you think it's going to happen?
I don't see it, not at the current proposal, absolutely not. First of all, I think it's low. And second of all, it doesn't sound like we have definitive financing. When you go through how it was going to be structured, they were talking about 25% equity. Arkhouse, in that interview you referred to earlier, said, no, it's really going to be 50%. But there must be some sort of nuance on how they're classifying what constitutes equity to get to that 50%. If Macy's is saying, no, it was really 25%, and then how real is the financing, and what would that structure really look like?
So, Mary, outgoing and longtime CEO of Macy's, Jeff Gannett, putting out a statement on Sunday, says Macy's continues to be open to opportunities that are in the best interest of the company and all our shareholders. So I don't know, what are the opportunities that you think are most likely for Macy's going forward? And we just got about 40 seconds left here.
Yeah, so obviously the management team has to continue to execute on their plan, and they've really done a great job, I think, really improving the overall execution of the business, but there's more to go, and I think they're just really challenged with the mall platform that they have and the department store structure itself. And I think some of the ideas that they have could work, but it's just going to take a long time to get there, from what we can tell. And I think that Tony Spring, the incoming CEO, is really going to up the game. But we'll learn more, what that involves. We already had the layoffs announced. That makes sense. You need to streamline, especially when revenues are lower, as they were in 2023. But, could they get a bid from someone else? That's always possible.
Yeah, it's really interesting. All right, and I should point out Macy's shares, while they're up today, they're down almost 10% so far here in 2024. Bloomberg Intelligence Senior Retail Analyst Mary Ross Gilbert, thank you so much. Really appreciate you weighing in on this Monday. She, of course, joining us from our LA bureau.
She mentioned the layoffs, 3.5% of its workforce. That was announced last week. Hey, let's go to Washington, D.C. now for a check the latest world and national news. We got Nancy Lyons standing by in the D.C. newsroom. Hey, Nance.
Thanks, Tim. New Hampshire is holding its Republican primary tomorrow. Nikki Haley has been campaigning vigorously in what may be her best shot at heading off Donald Trump. Bloomberg's Irv Chapman has more from Washington.
It's an uphill slog for Haley. Jennifer Flitton, head of U.S. government affairs for Invesco, said in a Bloomberg interview.
The momentum is behind Trump, and it's going to be a difficult position after New Hampshire if Haley doesn't get within at least 5 points of Trump. Now, if she comes within 5 points of Trump, she could have some momentum, some real wind to her back, and that could keep the money flowing going into South Carolina.
But in her home state, Flitton noted, Senator Tim Scott and the current governor and all but one House members have endorsed Trump. In Washington, Irv Chapman, Bloomberg Radio.
North Dakota governor and former presidential candidate Doug Burgum says he will not seek a third term as governor.
Part of it's family. We've got three, people, they say you got 3 adult kids.
Burgum says he and his wife, Catherine, are eternally grateful to North Dakota citizens for giving them the opportunity to serve the state. Today was supposed to be the final day of E. Jean Carroll's defamation trial against Donald Trump, but the proceedings had to be postponed due to illness among the jurors, as well as the former president's legal team. The Trump team wants the delay to last until Wednesday due to the New Hampshire primary tomorrow. The judge said he'd have to take it into consideration, but issued no decision. The youngest son of Dr. Martin Luther King Jr. has died at the age of 62. The King Center says Dexter Scott King passed away earlier today. His wife, Leah Weber King, says he passed peacefully in his sleep at their home in Malibu. He'd been battling prostate cancer. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. We are looking at an update on Wall Street with the Dow, the S&P, NASDAQ 100 index will broaden it, and the Russell 2000 all pushing higher. In fact, the Russell 2000 leading the gains today. The standout up 1.4%. We've got the S&P up 12, gain there of 0.2%. Dow Industrials up 106, up now by about 0.3%. And NASDAQ higher now by 51, up by about 0.4%. So the Dow, the S&P, and NASDAQ all advancing, looking at small gains after hitting a record last week. Traders are weighing recent strong economic signals amid warnings that the market has run too far too fast. As for that backdrop, Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
You know, it's interesting that it looked like we were about to have a little bit of a pullback, and then the growth trade came roaring back. And so it looks like the bull is fighting back as hard as it can. That being said, I do think we still had a bit of a sentiment problem coming into this year, so it would not surprise me at all to see this rally take a bit of a pause. But ultimately, we think there's room to move higher at the end of the year. We've got 5150 on the S&P.
5150, she said. Right now, the S&P is at 4852. Again, the S&P 500 index up by about 0.3%. By the way, you can hear more of the conversation with Lori Calvasina on the Daybreak podcast. You can download it wherever you get your podcasts. Gilead Sciences shares are down more than 10.5%. Its drug Trodelvy failed to significantly improve survival in a trial of patients with advanced lung cancer, a blow to the targeted treatment that is a win in one of the most promising classes in oncology. Again, Gilead down now by just about 10.9%. 10-year yield 4.10% with a 2-year 4.37%. Gold down 0.4%, 2020 the ounce. And West Texas Intermediate crude up 2.4%, $75.19 a barrel. Again, recapping, stocks higher, S&P up 12, again now 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stenovic, live here on Bloomberg Business Week on radio, TV, YouTube, and Bloomberg Originals. All right, and then there were two, and of course we're talking about what's going on in terms of the Republican presidential race. We've got Florida Governor Ron DeSantis. You know the news that came out over the weekend, suspending his presidential campaign late yesterday. So-called never-Trumpers in New Hampshire now have only one choice. And Tim, we're talking about former South Carolina Governor and UN Ambassador Nikki Haley. The focus is on her in a big way.
Yeah, it's a make-or-break moment for her. Her supporters say that she still has a chance to upset Trump or at least come in a close second. That window, though, is narrowing. Trump leads in the state with 50% support from likely GOP primary voters compared to Haley's 39%. This according to a poll from CNN published on Sunday. For more from the Granite State and the first of the nation primary, let's bring in Bloomberg Balance of Power co-host Joe Matthew, who joins us from Manchester, New Hampshire. Joe, good to have you with us this afternoon. You've been on the ground in New Hampshire. You were in Iowa before that. What's the vibe? You were there over the weekend. Just give us a lay of the land right now.
You know, the vibe is a quiet one, and it's kind of bizarre, to be honest with you. This is my 6th New Hampshire primary, and the thing that makes New Hampshire political Woodstock, such a thing as political tourists, homes to speak with
Is New Hampshire to her specifically, and I'm really thinking about the independent voters here. If they show up for her, what that might mean.
Yes. Well, that's absolutely right. She likes to think, I'm sure would love to say that this is her race to lose. It seems like, based on the polling, it is Donald Trump's to lose right now. We spoke earlier with Governor Chris Sununu, very popular governor of New Hampshire. It was the most coveted endorsement, and she got it. And he's talking about a strong second at this point. It's hard to tell if they're gaming expectations. They might want to make this look like a surprise, knowing that this is the one spot on the map where she could actually win a primary and make a dent. But, you know, Tim referred to this CNN UNH poll. That's a big deal. This just came out yesterday. Trump 50, Haley 39. That's the same poll that had them within single digits just 2 weeks ago, and it was a big story when that happened. This is now consistent with most of the other polls that we're seeing, which would suggest Donald Trump is going to win.
So, Joe, I thought your interview with the governor was just fascinating that you and Kayleigh did that. I'm wondering, though, what you make of what he said about her chances if she does indeed lose tomorrow in New Hampshire. What does her future look like in her potentially beating Trump to be the Republican nominee?
Well, it's interesting, you use the word lose because she wanted this to be a two-person race, and here we are with one. With Ron DeSantis dropping out yesterday, that's tough timing for her. He wasn't doing well here. He had about 8%, some say 6%, but those votes are not likely to go to Nikki Haley. He was much closer to, as you've seen, as an alternative to Donald Trump for those who just didn't want to do the MAGA chaos thing again. Tim, if she wins the New Hampshire primary, there are questions about whether she has a path. If you look at the next big contest, it's in her home state of South Carolina. You can't win the nomination if you can't win your home state, and she's losing badly there to Donald Trump. So the premise here for this campaign is momentum. If they can win, if they can come in a strong second, like Chris Sununu called it, that changes the numbers, they say, overnight and gives her a chance to go into South Carolina with the potential or an opportunity to win there. But guys, it's a long shot right now.
I am also curious, how we are thinking about Nikki Haley and as a possible vice presidential running mate for Donald Trump. Is that the wrong discussion to have at this point? I'm just curious what kind of, conversations you're hearing about that right now, Joe.
Well, it makes you wonder because some folks thought she was being real careful with Donald Trump because that might be something she was open to, and she certainly didn't say no when she was asked. Donald Trump just last night said she's not presidential material and that he's not considering her for that role. So who knows? She was his ambassador to the UN, so obviously at some point he thought she had a lot to offer. But we're looking at a lot of folks potentially, including Tim Scott, who jumped out of his lane, according to a lot of people, coming here to make an endorsement ahead of New Hampshire instead of waiting for his home state in South Carolina. Nikki Haley appointed him. He wouldn't be a senator without Nikki Haley, and that was considered a pretty major rebuff here when he endorsed Donald Trump.
Yeah, that was certainly a big move that we heard from him a few days ago. Hey, Joe, back to your interview with Governor Sununu. I found it so interesting that, you talked to him about, he talked a lot about all the reasons he dislikes former President Trump, but really likes Nikki Haley and is putting his support behind her rather than former President Trump. At the same time, it seems like he dislikes President Biden a lot more than former President Trump. And I think it's really emblematic of many Republicans out there who don't necessarily support Trump right now, but are willing to throw 100% of their weight behind him if he does indeed become the nominee.
Yeah, it's amazing how we talk about this like the general election is already underway, and it may be by Wednesday morning, which would be the longest general election of our lives, by the way. I'm not sure we can
buckle up,
endure such a thing. But yeah, to hear the governor, I was struck by that, Tim, a day before the primary, to be not only talking about a strong second, but indeed he'll vote for Donald Trump if it comes down to it instead of Joe Biden. This is why you have this air of inevitability, and you can't criticize people for saying that, but we really do want to wait for some votes to actually be had. And I'll tell you, it's a staggered closing here in New Hampshire. Most of the polls close at 7, but some are allowed to stay open until 8. And there's a hope that the Associated Press won't call this early while people are still in line. They called the race in Iowa 32 minutes into the process that night, and a lot of folks thought that was the wrong thing to do.
All right, well, we'll certainly be listening and watching. Joe, thanks so much for taking time out of what is a really busy day for you guys. Joe Matthew, co-host of Bloomberg Balance of Power from Manchester, New Hampshire. We're going to have more from the Balance of Power team later on Bloomberg Radio and Bloomberg TV. Having said that, interesting Bloomberg opinion column just looking at, this is by Francis Wilkinson, covers U.S. politics and policy, but talking about in the past 4 years, we're talking about New Hampshire, has gained 245,000 potential new voters, including those who moved from just across the border, young people reaching also voting age. So you wonder how that might play into politics. This is Bloomberg Business Week, and this is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Alaska Air says it began inspecting door plugs at its Boeing 737-900 ERs several days ago and says it does expect to complete the remainder without disrupting Alaska Airlines flight operations. Alaska Airlines shares, they're up now by about 0.3%. Delta, meanwhile, says it also took, quote, proactive measures to begin inspecting its 737-900 ERs, but has not yet commented on the results. We've got Delta shares down now by about 0.4%. Archer Daniels Midland shares are plunging after it placed its chief financial officer on leave and cut its earnings outlook pending an investigation into the agricultural trading giant's accounting practices. ADR now down by 23%. Ark House Management has asked Macy's to access to more financial information after the department store operator rejected a $5.8 billion takeover from the investment firm. More from Bloomberg's Steve Rappaport.
Charlie, the investors made a $5.8 billion or $1 a share offer for the company last month, and Ark House is threatening to take its offer to shareholders if the department store chain doesn't step up negotiations. The offer represents about a 19% premium to Macy's closing price on Friday. Macy's board says it will not enter into a non-disclosure agreement or provide any due diligence information to Ark House and Brigade. Macy's has struggled to compete as shopper preference has shifted away from department stores, with online retailers making inroads in key merchandise categories such as apparel and home goods. Last week, Macy's said it would lay off about 3.5% of its workforce and close 5 stores. Charlie?
And that's Steve Rappaport reporting. We've got Macy's shares up now by about 3%. Those are our top company stories at the Star. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenevec and Carol Masser live from the New York newsroom and Bloomberg Television, Bloomberg Originals, also on Bloomberg Radio and YouTube. We're everywhere. You can't get away from us. Hey, let's get down to Washington, D.C. for a check of the latest world and national news. We got Nancy Lyons in the D.C. newsroom. Hey, Nance.
Hey, Tim. It is a day before the New Hampshire primary, and former South Carolina Governor Nikki Haley is taking aim at the only other candidate remaining in the Republican race, Donald Trump.
When you hear Trump speak, what's he talking about? Grievances? The past? He's talking about vendettas?
Haley spoke at a campaign event in New Hampshire today. Former President Trump is picking up another endorsement from South Carolina Congresswoman Nancy Mace. She says her state backs Trump, not Haley.
Overwhelmingly, they are with Donald Trump. We've had 4 years of weakness in the White House. They don't want 4 more years of weakness in the White House under Joe Biden. They want 4 more years of strength. They want 4 more years of peace.
As for New Hampshire, the latest polls show Trump still leading Haley, in some cases by double digits. Marking 51 years since the Roe v. Wade Supreme Court decision on abortion, Vice President Kamala Harris today kicked off a nationwide Fight for Reproductive Freedoms tour, focusing on abortion rights. Harris told a crowd in New Hampshire freedom is not given or bestowed.
It is ours by right. By right. And that includes the freedom to make decisions about one's own body, not the government telling you what to do.
Harris says what the Supreme Court took away from women, Congress can put back in place. President Biden is honoring 2 Navy SEALs who are presumed dead after going missing off the coast of Somalia. One fell into rough waters and the other jumped in to rescue him during a special mission to seize Iranian missile parts headed for Yemen. Biden said today the sailors, quote, represented the very best of our country, pledging their lives to protect their fellow Americans. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Tim.
All right, Nance, thank you so much. Hey, folks, we do want to bring to your attention a story that just hit the Bloomberg by Julie Johnson and team, and it's talking about Boeing, and specifically one of its biggest customers, United Airlines, losing confidence in Boeing's ability to overcome the ongoing quality lapses that climax this month with, of course, that mid-air emergency on Alaska Airlines flight. It's an interesting story.
Yeah, check it out. out United CEO Scott Kirby has been venting his frustrations with management to colleagues and voicing his concerns over the handling of the MAX grounding. This, according to people familiar with the matter. Check out this story on the Bloomberg terminal, of course, soon at Bloomberg.com.
Yeah, also, right, exactly. So all the details. Having said that, we've got one more thing before we go here on Bloomberg Business Week, at least on the TV side of things. For those worried that AI was going to replace all of you in the workplace, turns out you don't have to be so worried, Tim.
Yeah, Massachusetts Institute of Technology, MIT, found in a study that sought to address fears about AI replacing humans in a swath of industries. Researchers actually looked at the cost effectiveness, Carol, of automating various tasks in the U.S., concentrating on jobs where computer vision was employed. They found that only 23% of workers could be effectively supplanted.
I think this is interesting. And they're talking about things like teachers, property appraisers, so only 23% could be affected.
Okay,
yeah.
my caveat here is this is for now, and this stuff's going to get cheaper because they're saying the cost-benefit analysis does not work out at this point.
Yeah.
But this equipment is going to get cheaper, so I want to see this in 2 or 3 years.
I think that caveat is in there too as well. All right, wrapping up. For those of you watching on TV, up next is The Close. For those of you staying with us here on Bloomberg Business Week, coming up in the next couple of hours, we've got the executive chairman over at Curaleaf. We've also got the former president and CFO over at Dow. And then don't go anywhere because we've got a simulcast, of course, with Bill Gross. I'm sure he's going to have a lot to say. That does it for Tim and me right here on Bloomberg Business Week.
Since hitting a low in October of last year, the gauge has added more than $10 trillion in market value, thanks to strong economic data and corporate results that have been behind this record run. But I will say, it's just the beginning of earnings season.
That's a good point. And we've got a lot of big earnings coming your way this week, later on this week, and certainly the quarter just getting underway. Having said that, coming up in the next couple of hours, our tour of super smart bills. That's what I'm going to call it.
I like that.
Who know a thing about Fed policy and the Treasury trade. We're going to hear from PIMCO founder Bill Gross in just a moment. It's going to be a cross-platform on radio and TV.
It's because we just spoke to Bill Dudley. So,
that's right.
Yeah, it's a tour of super smart bills. Also, Boris Jordan, executive chairman over at Curaleaf, stops by on how a move by the DEA might just be a game changer for the weed industry this year.
This is a big deal because you've been seeing cannabis stocks certainly move on this news. Plus, we're going to get into why tech stocks are the new defensive names.
Defensive?
Yeah.
Okay.
That's what a guest has to say.
Okay. We'll wait for it. Plus, Ashley Still is going to be joining us. She's SVP of Creative Business at Adobe. And she'll give us a little view of IT spend and how much of it has been related to AI.
I bet a lot, right?
Yeah, I bet so.
Just a little bit?
I mean, they are doubling down on AI. They're doing cool stuff at Adobe.
All right, so we're going to talk to her in just a moment. We're also going to wrap up the day with Howard Ungerleider. He's former president and CFO, chief financial officer at the diversified chemical giant Dow. He is not done yet, though. He's thinking about kind of his next moves after, what, 33 years at Dow?
33 years, since 1990. It's like the only job he's ever had was working at Dow.
Yeah, and remember, they broke it up. Like, it's just interesting.
He was the CFO when they did that.
It's pretty cool. So we'll see what he has to say and kind of get some thoughts in terms of the big macro issues that are on his mind. First up, though, let's get to the day's trade. Your top business stories on this Monday, January 22nd. Here is Charlie Ballett.
Hi, thank you very much. And here's what's going on. 58 minutes to go until that closing bell clangs on Wall Street with the Dow, the S&P, NASDAQ, all higher right now, all in the green. S&P right now up by about 0.2%. Looking at a 10-point gain right now on the S&P. Dow Industrials up 106, up by about 0.3%. NASDAQ, the composite index, up 0.3%. Cannot ignore the Russell 2000, though, surging now by 1.5%. Also today, we cannot ignore Bitcoin, back below $40,000, 39,842 on Bitcoin, a drop now of just about 4.5%. 10-year yield, 4.09%, with a 2-year, 4.37%. Spot gold down 0.4%, 20.20 the ounce on the precious metal. So again, recapping, stocks higher, S&P up 10, gain there of 0.2%. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stanovic. In just about a minute or so, we're going to hear from Bill Gross, of course, the founder of PIMCO. So we'll see what he has to say about the recent Treasury trade and what he thinks maybe we'll get from the Federal Reserve. Of course, we get that first meeting of 2024. That's next week.
Cut? No.
Probably
Nobody
not.
thinks it's not going to be a cut in this one.
No.
March? Cut then?
Maybe.
Maybe? How many cuts this year?
I don't know. And a lot of people are saying maybe it doesn't start till June or even the second half of 2024. I think what Bill Dudley told us earlier is really smart, prescient maybe even, or maybe just all-knowing in terms of the Fed has been very clear, Fed officials have been very clear that they're going to be data dependent. So folks, get ready to kind of just continue to move from data point to data point, Tim.
I also think, again, I go back to what these companies are going to say and what we're hearing from the companies. Is there softness? Is the consumer still very strong? Are they concerned about the coming quarter, the coming year?
That's a really good point, right? And what they see, because lower rates, especially if they've got to tap into the debt markets in any ways, that could certainly be helpful for them. Right now, we've got a 10-year at 409 and a 2-year at 437. Right now, over to our TV colleagues. They are sitting down with Bill Gross, the founder of PIMCO, a simulcast on radio and TV.
Investor Bill Gross, co-founder of PIMCO, for an exclusive conversation. Bill, great to have you here on the program. And I do want to start off here with the yield curve itself, what it's telling us, and more importantly, as Alex was kind of alluding to, how do you position around this if you're not quite sure, not just whether the yield curve will steepen, but what will actually drive that steepening?
Well, let me start, Romaine, by saying that a negative yield curve, and I use the 2 to 10 year spread, which is about a negative 23 or 24. It's been as high as 50 to 75 basis points, so it's less negative now. But when you think about it, commonsensically, when you think about it, capitalism and a finance-based economy, which is what we have, can't really do well when you can get a higher return for less risk. That's not the basis of a capitalistic economy. You need to get a higher return for more risk, and it's just the reverse now. And so, you know, I think ultimately the yield curve has to go positive in order to produce a relatively stable economy and a stable inflation rate around 3%.
Do you have faith right now in the economy and, more importantly, the folks who are shepherding that economy?
Well, no. You know, let me put it out there. You know, the Fed has not done well in the past 3 or 4 years in terms of, or 5 years, in terms of trying to find that magic Fed funds rate that will neither increase inflation or produce deflation. And so, you know, are they wise enough now to know exactly what the Fed funds rate should be at any point in time, or even, you know, 6 to 12 months down the road? You know, I'd be very cautious, and I'd view economic statistics like they do, but from an investor's standpoint that, you know, speak to fundamentals that the Fed isn't necessarily following.
Well, let me ask you, what would you do different if for some reason you were magically in the shoes of Jay Powell? What would you do different at this point?
Well, I would stop quantitative tightening. I think that's just not a correct philosophy and policy at this point in time to you know, continue to tighten quantitatively. They should leave the, you know, the reserve balance around $7 trillion and just see what happens going forward. I also think that, yes, the Fed should lower interest rates over the next 6 to 12 months. Real interest rates are simply too high. The 10-year real interest rate is 1.8%, which historically is very restrictive. And, you know, I think not only the Fed, but I would like to see the real interest rate on a 10-year come down to 1.5% or 1%. And so the way to do that is to lower interest rates from where we have it now at 5.25% for Fed funds, and to, you know, basically balance out real interest rates and lower them so that the economy won't go into a significant recession.
So, Bill, if you think we're going to get cuts in the next, say, 6 to 12 months, are we cutting because of normalization to get that real yield kind of at a more normal level, or are we cutting because the economy looks really bad?
Well, we're certainly not talking about cutting the Fed funds rate based upon an economy that looks bad, although there are indicators such as the leading indicator number that came out today, and other indicators that suggest, like we talked about in terms of the negative yield curve, that suggest that, at some point we're going to see a zero line, real GDP and maybe something lower. I think, to basically keep an economy going in this finance-based economy that we've had for a long time now, 5, 10, 15, 20 years, you need interest rates lower than nominal GDP. That's what drives, basically today's economy as opposed to what we saw 50 to 100 years ago. And so with nominal GDP at 5 and 6% and perhaps headed to 4, but we need the 10-year to be lower than nominal GDP in order to continue a steady progression in terms of economic growth.
So, Bill, in that environment, does it make sense that equities are at a record right now?
I'm sorry, say again?
Does it make sense that equities are at a record right now based on what you're talking about?
No, I don't think it does. I mean, I've got some historical charts and others have provided those for me, Bloomberg being one of them, that basically suggest that PE ratios of 19 to 20 times, which is what we're at the moment, and perhaps a little bit lower based on forward expectations, that PE of 19 times is much too high relative to a 1.8% real interest rate. Real interest rates were down at a negative -2%, just as recently as 2 to 3 years ago, and so they've risen significantly, but PE ratios haven't really dropped. And so I think ultimately, and this is a long-term type of statement and a long-term thesis, ultimately PE ratios have to get more in balance with real interest rates, which are relatively high now.
That certainly, Bill, seems to be a question for those folks who are looking for an entry point into this market. For those folks who already invested, and particularly those folks who piled into a lot of those big cap tech stocks, the Magnificent Seven, and even if you broaden that out, basically kind of the top 14 here, is that also a signal that maybe they should be looking for the exit?
Well, maybe not the exit, Romaine, but certainly in terms of additional funds going into those Magnificent 7 or 14, as you mentioned. It's probably the time to cool it off a little bit and to put your money elsewhere. That's always a difficult statement in terms of timing, because if I'd said this a month ago, I would have been more of a fool than I might be a month from now. But I think there are values in the market. I'm not suggesting get out of the market. I'm suggesting that perhaps you should be a little more conservative, but you need to be invested. A 5% Treasury bill, yes, that's attractive, and I have some. But basically, there are certain stocks with higher yields, relatively safe dividends that are more attractive to me than the Magnificent Seven.
Like what, Bill? Are these places where you yourself have put your own money?
Oh yeah. For instance, I've talked about the master limited partnerships for pipelines that yield 8 to 9% with a tax-deferred type of status. And just this morning, Romaine, Newstar, which is one of those MLP pipelines, was not purchased yet, but there was an offer from Sunoco to buy Newstar at a 10 to 15% premium. And so with yields at 8 to 9%, and with this type of value and attraction from other companies that are in the takeover type of business, I think that's one clear example of what you should be buying relative to the Magnificent Seven.
And we'll definitely get more to M&A, because I know Romaine's super excited about M&A, Arb, so hold that thought. But I just want to get your quick take on certain other areas of the equity market. What about banks, for example? What about REITs? What about areas where you can get some good yield and maybe some more risk is priced in, they're trading really cheaply? What do you do with those areas?
Well, I like them. As you know, I've sort of become famous or infamous in the past 5 or 6 months talking about bank stocks and how they were, relatively historically cheap with a book to price to book type of ratio at about a 0.5, which is about as low as they've ever gone. Now it's much higher. They've done well, but there are certain bank stocks that I own that yield about 6%. One of them is CFG, another is KEY, another one Truist, TFC, which is down today, but these are attractive type of situations with 6% yields and still some upside, although at this point they're probably going to level off too.
Bill, I guess a good question is, I understand why you like those names and why you like the dividend yield, but none of that is big tech and the AI trend and semis. How do you play the trend without buying into the big guys that are already expensive? Is there a happy medium for Bill Gross?
Well, I don't own any of the Magnificent Seven, although I think Microsoft is certainly a great long-term value and can be bought, at this point with expectations of an attractive return going forward. There's a stock in Europe, in Euroland. There's basically the Microsoft of Euroland. Symbol is EPAM. And it trades at a much cheaper value. It's got some interests in Poland and so on, which are geopolitically risky, but I think that's an attractive situation. And, so you can pick and choose, but for the most part, the Magnificent Seven are not on my buy list.
All right, well, let's talk about some of the other things that are on your buy list, at least what we know publicly. You have been involved in some merger arbitrage plays, including Capri Holdings and at least a couple of others here. Why do you find just overall merger arbitrage attractive in an environment where, quite frankly, there doesn't seem to be that many mergers anymore?
Well, we just had one this morning with Newstar, but yes, I think in terms of Capri, it was just approved basically by China a few weeks ago in terms of the potential going forward, and that tends to be a relatively consistent indicator of what we might do here in the United States. Capri's trading around 40. It's got a buyout around 47, and so that's 7 points on a base of 40, so that's about a 17% return, over the next 6 months if it goes through. So there's certainly some risk there. SPLK is another one. It's called Splunk.
Yeah.
And Splunk is an attractive situation with a smaller total return, maybe 4 or 5 points going forward, but it, consistently moves higher each and every day. And so, these aren't NVIDIA type of stocks, but they're, it's situations where you can certainly outperform Treasury bills with a, pretty good margin of safety.
I am curious when we talk about the idea of sort of whether these deals go through. There's been so much talk about some of the deals that either failed because of regulatory pressure or maybe just because the buyers or the sellers got cold feet out of it. I am curious as to whether it's easier or harder to sort of assess these sort of the potential for these mergers to actually make it through, given the regulatory environment, given the cost of capital to finance it, and quite frankly, given investor appetite, which at times seems to be a little bit tepid for these types of tie-ups.
I think it's harder, Romain. There's no doubt the conditions that you just mentioned, make it more difficult. But, we're talking about relative value here compared to the Magnificent Seven and some of the others that stocks at 19 PEs. And so it just seems to me that, a relatively conservative investor can make a 10 to 15% annualized type of return without as much risk as being in high-tech stocks.
Hey, Bill, looking ahead, it's an election year. New Hampshire primary is today. Do you have a President Trump 2.0 playbook yet?
Are you talking about DWIC, digital?
No, I'm talking about
world?
if President Trump becomes a president again.
Oh.
What do you do? Where do you go?
Well, that's certainly a risk. So we have political risk domestically. We have geopolitical risk in terms of, a number of situations around the world. So what do you do? Typically, you remain very cautious.
So what does cautious mean? Does that mean you want to go buy the 10-year? Is it buy the dollar? Is it get out of certain positions? What does cautious mean for Bill Gross in that environment?
Well, I think it means, going for an attractive yield, an attractive dividend that's, consistent going forward. I don't really want to mention this because these stocks are not on the favored list of any investor, but tobacco stocks like Altria yield 9.5 to 10%, and the dividend has been raised every year despite the problems with the tobacco industry. There are stocks like Verizon and AT&T that yield 6.5 to 7%, and so you can go to areas where there's perhaps still some growth, like with Verizon and AT&T, and a high yield at the same time. It just seems like a better bet for an investor that wants to conservatively, earn perhaps double digits going forward.
All right, Bill, I'm going to save you from the political questions from Alex. Well handled there. I am curious about opportunities outside of the United States. There's been a lot of discussion about how basically one of the best performing markets out there isn't the U.S., it's Japan. There's been a lot of discussion here about how there is a lot more money that's coming out of China and looking for a place to go in sort of, the developing world, if not to Japan itself as well here. Do you look at a turning point in any of those markets that might provide, at least on a relative basis, a little bit more return than what you can get here in the U.S.?
Yeah, I think so. I'm looking, and I've dabbled a little bit because, as you point out, Romaine, non-U.S. stocks have not done well relative to the rest of the universe. Japan is doing, better this year and last year, but there's an ETF by the symbol of VEU that contains all or most stocks that are non-U.S. Related, and so it's a long-term timing situation in which the expectations for this have to turn around. But I think there's more value in European stocks than in the United States based upon price earnings ratios and other considerations. Stocks like Volkswagen, for instance, or BMW, gosh, the PE ratios there are 2 to 3 to 4 times relative to GM and Ford and certainly Tesla. And so, yeah, there are considerations outside the United States that I think an investor should look at.
This is interesting, Bill. I mean, I always love talking to you. I mean, for a guy who basically made his name and his fortune in the fixed income space here, you really seem to have a very interesting view about just the pace of equities right now and the attractiveness there. Is it more exciting now for you to, I guess, do what you're doing? Obviously, you have the independence to do whatever the heck you want now, but is it more exciting to, I guess, to be more in that space than in bonds and fixed income?
Well, yeah, I think it is. The volatility is higher, but to be fair, I'm still in the Treasury market with puts and calls and options, and even if you don't have a bullish outlook on the 10-year Treasury, which I don't, you can still make a decent return by doing a spread trade, a put and a call spread trade that over a month's period of time can provide a decent return. So, yeah, it's more exciting to be in stocks. And Romaine, one of the considerations in the stock market is consistent with what I did at PIMCO. Stocks are a volatility type of consideration. At PIMCO, we sold volatility consistently going forward based upon mortgage pass-throughs, et cetera, et cetera. And so, I like dabbling in the equity market more than bonds, but bonds are still there.
I don't think I ever would have thought that Bill Gross would say that. Bill, before we let you go, I would kick myself if I didn't ask you this. We are having exploding fiscal deficits in the U.S. Whoever takes the White House, that's going to continue to grow. At some point, do you think the bond market can start telling Washington, D.C. to trim more fat, like the bond market did in the U.K. with former Prime Minister Liz Truss?
Well, hopefully yes, but I don't think the bond market can tell Washington anything. I think it's Washington that dictates the bond market. You know, Washington is concerned in an election year with maintaining a deficit of $1.5 trillion or more in order to keep nominal GDP higher. And so, yes, I think this election year is important, but I don't think the bond market, even under a supply consideration that suggests higher interest rates, is going to do much good in terms of giving a lesson to Washington. It's vice versa.
Do you think we're going to actually see that lesson, I guess, in your lifetime, in my lifetime, or is this just something that our children or grandchildren are going to inherit?
Well, you know, demographics argue for higher deficits going forward with Social Security, with Medicare, with Medicaid. You know, it seems to me that we're in a situation where long-term deficits, as far as the eye can see, are going to be consistently high, not just here, but in Euroland and elsewhere. It's simply a situation now where there's too much debt, and in order to, you know, keep that debt rolling and keep the economies rolling on a nominal basis, it's necessary on the part of central banks to, you know, to maintain a relatively easy monetary policy, and the same thing with fiscal. I think $1.5 trillion deficits are here to stay.
All right, Bill. Really appreciate you taking time for us. Always insightful. Bill Gross, of course, the co-founder of PIMCO, helping us kick off to the close here on this Monday afternoon, Alex. Interesting, too. I do kind of find it a little humorous, and he kind of, you know,
all right,
makes
everybody,
the point that
you've been listening to, of course, Bill Gross, former of course, he created PIMCO, to be quite fair, and really has been, or was really, a go-to when it had to be anything with the fixed income markets, the Treasury trade, Fed policy. Of course, he, you know, is no longer active day-to-day in that company, but there's one thing he said that, like, we perked up on.
He said the equity market is, like, more exciting to him now than the bond market. Like, he likes trading equities more than bonds.
What does that mean?
He did say also he doesn't have any of the Mag 7 stocks, the Magnificent Seven. But what does it mean when the bond king says he's excited about equities?
It means we are living in interesting times. Wow. Having said that, you've got a 10-year right now at 4.10, a 2-year note with a yield of 4.38. So interesting. We're definitely off our highs of the session. Speaking of being off our highs of the session, the equity market bouncing around. We're off our best levels of the day, but still tech outperforming. The NASDAQ up just about 0.4%. This is Bloomberg. All right, everybody. Investors not so keen on the cannabis sector last year. The advisor shares pure U.S. cannabis ETF little changed in 2023 after dropping 73% in 2022. This year, however, as a whole, Tim, the group is up about 20% as measured by that ETF.
We have seen the group pop this year as investors seem optimistic about a possible reclassification and potential regulatory changes that could benefit the cannabis industry after the Department of Health and Human Services released some 252 pages of documents asking the DEA to ease its position on cannabis. We're talking, of course, about the Drug Enforcement Agency.
Right.
This, according to Bloomberg News over the summer.
Yeah, a lot of pages. What's key, and for the first time, the HHS recommending that the DEA reschedule cannabis from Schedule 1 to Schedule 3. It gets a little wonky under the Controlled Substances Act, but it's significant. To do this, HHS had to find that cannabis had acceptable medical uses and a relatively low potential for abuse and dependence. Many people reporting, the Wall Street Journal kind of noting this out specifically as to why this is so significant.
Yeah, net, the HHS recommending sweeping changes to federal marijuana laws, and yet we've seen this industry high before in its societal norms and politics. have their say. Politics a big part of this.
Absolutely. So let's get more on the industry. We welcome back Boris Jordan. He's executive chairman at Curaleaf, here with us in our Bloomberg Interactive Brokers studio. Curaleaf shares, by the way, they're up about 17% year to date after 3 down years, with the stock losing more than 70% since a high on February 10th, 2021. We know it's been tough going, but much different tone this weekend, this year, I should say. Boris, first of all, Happy New Year. Good to have you back in the studio.
Great to be back in the studio.
You walked in, this is the first time since COVID, right?
Yeah, first time since COVID back in the studio.
All right, talk to us about the mood this year. We got a little wonky in terms of what is going on with regulators, the DEA and HHS, but this is significant potentially.
This is literally a game changer. I think that in many ways, if you read it, and I actually spent a couple of days reading 250 pages, and the thing that I took out of it the most is this was largely an apology, almost by the federal government, about cannabis. What do you mean by that? For the last 50 years. Well, because if you look back at it, when they scheduled cannabis to Schedule 1, there was a tremendous amount of papers written on how awful it was, how terrible it was for your health, that there were no medical benefits, that this was the root of all evil. And if you think about it, today, not even drugs like cocaine or fentanyl are Schedule 1, right? Things that actually kill people. I mean, alcohol isn't even scheduled, which has a lot worse effects on the human body than cannabis does.
So it's basically a classification, right, of these
It's a classification, and I think in many ways they're also, not only are they following the people in the country, the fact that, 80% of the country now has access to either medical or recreational cannabis and is frankly using it, but also you have major countries like Canada and Germany. Germany, on the 22nd of February, is going to be voting to take cannabis off their narcotics list, not rescheduling from Schedule 1 to Schedule 3, but taking it off completely. So you have major countries around the world that are starting to recognize the medical benefits of cannabis and are taking it off the list.
Is Germany's approach the right approach, in your opinion?
I personally think, every country has its own approach. I think for Germany, they have decided that that's the right approach. They want to take it off. And what that allows them to do, in Germany at least, is that all doctors will now be able to prescribe cannabis. And more importantly, today in Germany, under their current law, you have to try other drugs before you can try cannabis. So now that won't be the case. You can go use cannabis as a primary drug, and you can have any doctor prescribe it under the new legislation.
So what about the timing for the potential DEA rescheduling of marijuana, Boris? How are you thinking about it in terms of timing? Do you have any clarity on that? Because I'm reading upbeat stuff, but they're also saying slow it down, everybody.
Yeah, I think what you said in your introduction was right. I think this is very political now. We are going into political season. This is something, particularly with the Democratic Party, to get out the younger vote. The younger vote is very much pro-cannabis. We all know they're using a lot more cannabis than they are alcohol. Alcohol sales in all states where cannabis is now legal are down, 10 to 15%. So this is a real vote getter potentially. And so I think this is going to be tied to politics. If that's the case, if we're right on that, then the latest they can really come out with this is mid-April. And the reason for that is you have to have a 60-day comment period after the recommendation,
right?
And then you have to have 60-day legislative period. 60-day legislative, under our calculations, is about 3 months before it can become active. And so that means if they want it active before the election, if this is really political in nature, then they really the latest they can do this is really April. However, if it's not political, then they can take it out in 9 years. I mean, we've seen that before too.
Which one do you think they'll do?
I personally think that they wouldn't do all of this if this was going to be, a 9-year thing. I think that they are going to probably make the recommendation to reschedule sometime in the next 3 months.
All right, so if that happens, what does it mean for Curaleaf specifically? What's the all of a sudden?
I mean, for Curaleaf, it's an absolute game changer for a variety of reasons. For instance, on 2024 numbers, we would pay an extra $200 million cash in taxes to the federal government over and above our normal corporate tax rate, which would be equal to everybody else's. So largely the cannabis industry, and one of the reasons that these stocks have been down is people have realized that the cannabis industry is working for the federal government. Anything we make gets paid out in taxes to the federal government. So we can virtually not produce positive numbers on the bottom line.
So explain that.
Because our effective tax rate is over 70%. And the reason for that is we cannot write off any expenses, which is, by the way, really bad for benefits for employees, Anything we try to do for employees is not, we can't have IRAs, we can't do anything because of this tax system. And so, today we can't write off any expenses. So that brings us to an effective tax rate of 70+% is what we're paying.
How do you run a business like that, if that's the case?
That shows you how well these companies are actually run. The fact that they can actually survive in an atmosphere where we're paying 70+% taxes.
Okay, beyond the tax benefits, which I know you've talked about in the past and have been well documented, how do you pivot your business into new areas? Do you start selling things differently? Do you start doing things differently, unrelated to taxes?
So a lot will depend, and this is the big unknown, a lot will depend on what the DOJ says after this rescheduling. So we're expecting a DOJ memo. The code word for it is called the Garland memo. That's going to come out very similar to the Cole memo under Obama, which will then describe what they mean by this rescheduling. Like, what are the rules going to be in the marketplace? And there's a lot of unknowns because at the moment the states control the regulation of cannabis, right? It's still federally legal. Rescheduling doesn't make it federally legal. It just rescheduled from Schedule 1 to Schedule 3. So now we need to see what is the DOJ going to say on the back of that. We also have safer banking that's going through Congress right now. It's now in joint committee. Many people don't realize that.
My entire career has been.
I was just going to say.
Right, but it's been
how
a
many
big.
kids have you had since we've been talking about
this?
It's literally, I've been looking at this for 10 years. I'm just as frustrated. But I will tell you what I learned last Friday. This is absolutely in joint committee between the Senate and the House. That's never happened before since the beginning. They are now negotiating aspects of that bill, and they're looking to bring it in March. I believe that's also part of the coordination.
So you're not worried about November elections in terms of how that plays out and could affect this, because you think a lot of it's going to be done prior to that?
I think they're going to try to get a lot of it done prior to that. I mean, we have two candidates right now that are front runners that are both anti-cannabis. Let's be honest, both Trump and Biden are not necessarily pro-cannabis. And so a lot of this that's happening today is happening by the Biden campaign and by pressure because of the political situation. Even against all the lobbying by pharma and interest groups that are against cannabis, this thing is really starting to gain traction.
So tell us a little bit about your business and what people are buying. Are we moving beyond flower and buds? Are we moving into vaping products? What are you selling the most of right now?
I have to say the industry has really matured. If you take a look, and it's different in the U.S. and Europe. Curaleaf is the only company that's got U.S. company that has a very substantial presence in Europe. We're selling cannabis in 4 different countries in Europe. And in Europe, it's very medical. It's almost pharmaceutical in nature.
Right.
So we're selling a lot of formulated pills. We're selling a lot of products, but also flour. And flour is very popular with doctors in Europe as well. In the United States, there's a much broader array of products. It's much less regulated than it is in Europe. And so we sell a whole assortment. One product that's really gaining, and I said this a year ago, is drinks. Drinks are really starting. Seltzer waters are really starting to gain. Iced teas with cannabinoids.
So is that where the growth is, Boris? But what is still
the growth
bulk
is
of
definitely in products, but flour is still the door opener.
The bulk of your business.
Yeah, the 50% of our business is flour, and for all cannabis company. But when I started, it was 90%.
Right.
And today it's 50. So that 40% has largely been formulated products.
So it stayed constant. Everything else has grown?
That's right.
Or that's gone down?
I think the whole industry has been expanding, so I would say that's right.
Okay.
I'm wondering about your thoughts on the rising concerns over high-potency THC products, addiction associated with that, psychosis associated with that high potency. Is there any sort of threat when it comes from a regulatory perspective in certain states about potency caps?
So I'm going to get criticized from the industry by my comments. I'm wholly in agreement that there needs to be regulation around potency. That's my view. I mean, we run the largest company in the world in this area. We want to be the responsible company to push this. I personally think that there should be potency caps. I actually think that the THC is not the most important part of the product. I think a lot of the terpenes on these products are actually more important in terms of entourage effect than THC.
Meaning those other things are the things that make people have the feelings of being high?
Or relaxed, or working with anxiety. Like, we're doing a lot of R&D right now in cannabinoids outside of THC that are in the cannabis plant. I think that, for the most part, the evidence of addiction on THC is really anecdotal. There's no real evidence that THC is addictive.
The psychosis part, though.
But the psychosis part is a problem. And so, in my personal opinion, is we need to do science, and what rescheduling will allow, by the way, that's probably the biggest benefit of rescheduling. It will allow federal dollars to finally flow into R&D around the cannabis plant. Because today, there is no federal dollars around R&D. This is going to be a game changer because we can now openly do R&D working with the government on issues like potency.
I am curious. We've been talking a lot about elections, and I want to go back there. I know we talked a little bit about it with you already, but does the industry like one candidate over another? And let's assume that it is a repeat of the Trump-Biden matchup. Is there one candidate that the industry likes going into this
Why does
election?
everyone have that reaction when you
I'll tell you, because the industry is...
Or filter right in.
The industry is just like all of us. We're Americans, and we're all tired of the political
Boris,
process.
I hate to tell you, we're just getting started.
I know.
Here in the U.S.
I know, we
but
are.
Is there one that is
There's no question
more
that
helpful to the
historically
industry?
the Democrats have been more favorable, but for the most part through lip service, not necessarily through action, but at least on the political side, the Democrats have been more open to try and push through regulatory change on cannabis. So yes, I think the industry would err on the side of Democrats for the most part over the Republican Party.
I always like to ask about actually using the product, CEOs and executives of companies. How do you use cannabis? What products do you use?
So I'm a user every day. I use it for sleep. So I travel a lot. I've got a lot of jet lag, a lot of stress, anxiety, being in the cannabis industry and having 5 children. Definitely adds to that. I use it every single evening for sleep, and it has changed my life.
Okay, I don't want to blow up your spot or anything, but how do you travel with it?
I just put it in my necessaire and I travel with it.
Okay. Sorry for blowing up your spot.
In the United States, the worst thing that the TSA will do to you is actually have you throw it out. That's what they'll do, right? And for the most part, though, when it comes to edibles, they don't have a problem. If you're traveling with flour or something like that, they may have an issue with it. I have found that edibles are not something that they really have an issue with.
Really interesting. Very quickly, what's the one risk to all of this? Since we have been here before, we've had a lot of optimism, only to kind of have the rug pulled out from
There's
under
two
us.
things that I would say at risk is, first of all, political will.
Okay.
Will they actually, is this again lip service for politics, but they won't take it to the finish line? Because what this industry is all about now is show me. It's about show me. I mean, if you look at Curaleaf went public in 2018 at a $4 billion market cap.
Yeah.
At that time, we were doing $70 million in revenue. We're going to do over $1.5 billion this year, and we're trading at a market cap of $3.6 billion. So we're actually down on our IPO 5 years ago,
Right.
even though we've grown the business 15 times.
All right.
Right? So it's an amazing thing.
Is there any other risks, or did you get them all in?
I think that the main risk is a political one,
Okay.
is whether they'll do it. And two is, the lobbying, by the pharmaceutical industry that doesn't want to see cannabis because it is a replacement product for a lot of the pain medicines. We're doing a lot of R&D in that area in Europe. And I can tell you, we're about to launch a drug that will address pain medication out of it. We're working together with Imperial College of London on this. And it's a game changer. And that will be a big competitor to opiates.
We'll come back and talk more about
please.
that with
We'd
us,
love to.
and love to hear more about what's to come. Boris Jordan, thank you so much. Happy New Year. Good to have you back.
Great to be back. And it's good to be back in the studio.
And good to get to know the personal lowdown on how you use your products. He's founder and executive chairman of Curaleaf, joining us here in our Interactive Brokers studio.
Hey, let's get on over to Charlie Pellet, who's got an update on business news. Hey, Charlie.
Well, hello there. We are higher across the board with the Dow, the S&P, NASDAQ all advancing. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green, but off their highs with the Dow currently up 141 points. S&P's gained 16, while NASDAQ rises by 0.5%. The U.S. 10-year yield at 4.1%. Gold is down 9. Oil trading in the green, but Bitcoin is sinking by 4%. Among the main 11 S&P sectors, leaders were real estate and the industrials. Consumer staples, utilities, and consumer discretionary were in the red. And leaders to the upside in the Dow, Walgreens and Disney, while Nike led to the downside. Regarding earnings, Zions Bancorp reported intraday shares rose 5%. And in other news, Archer Daniels plunged the most ever after placing its CFO on leave and cutting its outlook. Wrapping things up, United Airlines reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type SQUA, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
TikTok, everybody. Just under 18 minutes left in today's trading session. We've got equities still higher across the board, but we're definitely off our best levels of the session. Just heard Charlie breaking it down. Our next guest, though, has something interesting to say. She always does. Tech stocks being the new defensive names, Tim.
Well, she also says you've got to zoom out. You know, when you talk about last year's great returns, you got to look at that in the context of what happened over the last couple of years. For our Drive to the Close this afternoon, we're very pleased to have back with us Nancy Tangler, Chief Investment Officer at Laffer Tangler Investments, also the author of The Women's Guide to Successful Investing. She's here in the Bloomberg Interactive Brokers studio. How are you?
Good, Tim. How are you?
Welcome back.
Thank you. It's so good to be here.
Is it? It's cold and you're like used to warm places. Like
No,
California,
I'm a native San Franciscan,
yeah, like
so
Arizona. Like these are the places you like, right?
it's supposed to be cold and wet in the winter, so I'm happy to be here.
Okay, well, we're happy to have you here.
Thank you.
So tech, the new defensive.
Yeah, well, these are companies that are reliable earnings growers. Like, just think back in 2022, you had ServiceNow turning in 25 to 29% earnings and revenue growth, and still it sold off. Yeah. So I think you want to be able to expose yourself to companies that are going to be able to deliver earnings in a slowing economic environment. You look skeptical.
I am a little skeptical because you think of these like tech companies, they're the ones that go lower when there's concern about high rates. There are concerns about companies with a strong dollar, and a lot of them make their like Microsoft makes so much revenue outside of the U.S. Like, just doesn't strike me as defensive.
Fortress balance sheets. Microsoft has doubled cash in quarter over quarter, thanks to earnings and free cash flow growth, but also to higher interest rates. So these companies are actually benefiting from higher interest rates. And if you think about that old saw that when rates go high, tech goes down or growth goes down, that really is related to companies that don't have earnings.
Okay,
so
that's what I was going to say.
Discounting
It's
back.
like that basket of unprofitable tech companies, right?
These companies have pretty robust earnings.
Yeah, I mean, you're talking about a company like Microsoft.
So drill down. You mentioned Microsoft, Palo Alto Networks, Amazon, Broadcom, ServiceNow. I mean, these are names that you think investors should add money to, Nancy, on a pullback, or how are you thinking about it?
That's right, Carol.
Okay.
Yeah, I mean, they're in our 12 best ideas portfolio, which was up 41% last year. So when you take your best ideas, in my experience, and put them in its own portfolio, it's a little gutsy because we only have 12 names in there. But those are names that we have high levels of conviction on. And I think you want to just remember that since the IPO, Amazon is up 175,000%. So when was it too late to get in?
But it was questionable for a long time, and you had to be very patient. We talk about it all the time.
I mean, remember what a big deal it was when Amazon reported a profit consistently?
And I was one that missed out because I was classically trained, right? And we're like, where are the earnings? How can you value this company on nothing but revenues? And so I think you have to step back, and then there's a secondary item, which is share buybacks.
But wait, go back for a second, because you said, like, these companies have to be making earnings. But, right, for a long time, Amazon did not. So, like, how do you look for those outliers that you're going to have to be really patient with that might become the Amazon of tomorrow?
Because, like you said, you missed out on a lot of those early gains because you
I was too skeptical.
Avoid a company that doesn't have earnings.
Yeah, so we use relative price to sales ratio. That was something we added back in, and we look at it on our Bloomberg terminals that you guys created the charts for us. And so we have relative price to sales ratio. When the relative price to sales ratio is low, based on history and compared to the market, that's how you buy companies that don't have earnings. You want to pay
because they're selling a lot of stuff.
Yeah, you want to pay as little as possible for a future point of revenue or dollar of revenue. And typically what happens is the stock prices go up so fast that you're able to buy them for a really long period of time. And it's because it's a ratio, so it's inverse to what you might think. So we use that as a way to identify. And then if we get our secondary metric confirming, that's even better. So that was Apple in 2012, where the relative yield was super high. Remember, the yield was at 3% almost, above the 10-year back then. And we were buying it as fast as we could.
Would you ever make an ETF based on your 12 ideas?
I would love to. We have the TGLR, which is, it follows our equity income strategy. So we launched that about, I don't know, 3 months, at the worst time, at the top of the market. And so it's now come back. We are looking at doing that, but ETFs are all about distribution. So we offer it to our clients in their, in their portfolios, but we are looking for a partner to do just that. So great question.
How are you thinking about kind of what happens? Here we are getting ready next week for the first Fed meeting of the year. We're not really expecting anything. We had Bill Dudley on earlier talking to him, this whole idea of data dependent. But how does what the U.S. Central Bank may do, Nancy, kind of impact your strategy at this point, if at all?
It doesn't, Carol. I think we've found that the Fed has been super unreliable in messaging. They're now talking about, quantitative easing, if you will, by letting securities roll off. That is a precursor, in my view, to they're going to cut sooner than they may be letting. And I hate saying this, but I think they've become political animals, and they're not terribly independent.
That's something we talked about a lot with Bill.
Yeah,
I missed that. Sorry.
That's okay. You can go back and
You're
watch it on the
busy.
terminal.
You're busy,
We have
too.
it on the terminal, Nancy. I know you're there. Well, I'll send it to you. But he was. I think he was very clear about how he answered that question, Carol. And he said,
I think so too.
The Fed, like he never felt pressure when he was at the Fed. He told us, and you even pushed him on that and said, and he said, you said you're a human being, like. And he said he never felt that pressure. What gives you the indication that they're being political?
So curious story. I interviewed for a position there, totally unqualified. It was a debacle of an interview, but I got some insight into the way things operate. The first question I was asked was, have you ever said anything negative about President Trump? Now, if that's not political, I don't know what is. But if you look at, and I said, well, actually, I don't think in writing. So that was the end of my interview. But if you think about
next,
hey, it gives you a good story though.
If you think about how long Chairman Powell waited, there was this whole transitory business. There was no reason for that. He allowed a controlled burn to turn into a wildfire. He was waiting to get reappointed. I'm not alone in thinking that. I hate saying it, but I think it's true, and I think they'll cave again.
Cave in what sense?
I think we'll see more cutting than they're alluding to, maybe not as much as the market thinks. Well, let me put it this way, more easing. So whether it comes through the balance sheet or cutting, it's another story. But they're not going to let this continue.
All right, just got 30 seconds. We always want more time with you. But the run-up that we've seen from late last year, would it be expected to see a bit more of a breather here on the equity side of things?
I hope so,
10% worth?
Once a year, we get a 10% correction. I think that would be healthy. But remember, 2 years, the NASDAQ's actually down through the end of last year on a trailing 2-year basis. So this isn't crazy.
You got to widen out.
Yeah, and compared to the 90s, Microsoft was trading at 51 times peak earnings. It's trading at 30 times. So don't tell me this is frothy, out of control valuation.
All right, we're going to leave it there. Oh, my God, that went too fast. Come back soon.
Thank you.
Stay warm. So appreciate it. Nancy Tengler, Chief Investment Officer at Laffer Tengler Investments. You know her new book, The Women's Guide to Successful Investing. It is out, so check it out.
Yeah, good stuff. We always love it when you join us.
Fun.
I always love you guys.
I
get energy.
I do listen all the time. I just been traveling today. I had to go up to Connecticut.
We love it. Well, thank you so much. Have safe travels.
All right, you are listening and watching Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. A partnership with Dave Portnoy's Barstool Sports is powering shares of video platform Rumble higher. Right now, we've got Rumble up by about 35%. Investors flock to the company that is backed by billionaire Peter Thiel on Word of the Pact, which will use Rumble users' access to all of Barstool's sports and entertainment content on the platform and does include an advertising arrangement. Again, shares of Rumble, they're up now by 35%. Archer Daniels Midland is plunging after placing its chief financial officer on leave and cutting its earnings outlook, pending an investigation into the agricultural trading giant's accounting practices. ADM right now lower by 23%. Gas station owner Sunoco has agreed to acquire pipeline and fuel storage company NewStar Energy for about $7.3 billion in a move to buy up more of a key part of its supply chain. And with details, here's Bloomberg's Tom Busby.
Charlie, the all-stock deal expected to close in the second quarter. The acquisition will expand crude oil transportation and storage for Sunoco, one of the largest independent fuel retailers in the U.S. NewStar Energy's assets, which include pipelines and terminals for oil, chemicals, ammonia, and other fuel-related products, are mainly located in the Midwest and West Coast, some in Mexico. Now, Sunoco says the deal will increase its ability to use more of its own terminals and allow the company to optimize fuel supply cost. It will also allow Sunoco to expand its presence across more of the U.S. Charlie?
And that's Tom Busby reporting. Sunoco down now by 4.7%. But shares of NewStar, they are up by 17.9%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, 4.5 minutes left in today's trading session. Tim and I are getting ready to head over to our TV colleagues. We're going to wrap up this trading day. Having said that, on our radar is a story about Boeing specifically.
Did you do that on purpose, the radar thing?
No.
No. Okay. Well, it sounds good.
We're just really sad.
You heard us mention this, but it is the most read story in the last hour. It is worth talking about one more time. It's from a scoop from our own team here at Bloomberg, including Julie Johnson and Sid Phillip, and the entire team, Josh Wingrove, Mary Schlangenstein, all about how one of Boeing's biggest customers has lost confidence in the company's ability to overcome the ongoing quality lapses that climaxed this month with that mid-air emergency on an Alaska Airlines flight. We're talking, of course, about United Airlines CEO Scott Kirby. He's been venting frustrations with management to colleagues and voicing his concerns over the handling of the MAX grounding. That's according to people familiar with the matter. Carol, one thing that's emerged in the wake of this latest issue with the 737 MAX, which, by the way, has been expanded as of yesterday to companies that fly the 737-900ER. That's the extended range predecessor to the MAX. It's been flying since the late 90s. Those companies are now told to do visual inspections, the FAA has ordered. We should note that, again, one thing that has emerged in the wake of this is that a lot of discussion has talked about how Airbus has taken the baton, and this idea that, yes, there's a duopoly, but it's turning more into a less of a duopoly because Boeing has fallen so much behind.
Right. We've done some stories, certainly here at Bloomberg. What's interesting is United's going to actually report after the closing bell today, right? And so one of the things will certainly be on analysts' radar, just to go there again, is questions on how the grounding of its Boeing MAX 9s is affecting the carrier and how much longer regulators will require the planes to be parked. So there's going to be a lot of questions there. We'll be breaking those headlines as soon as it crosses after the close today. But Boeing shares right now, I'm just looking, they're just down a little bit in the trade. So
they were down early in the morning on this FAA news, then they moved higher with the ebullience of the market. But yeah, they've been lower.
But this is the concern, right? If we're seeing a little bit of a widening out, you know, the impact on Boeing, which has come back in the last couple of days in terms of trading. So, all right, everybody. Speaking of trading, we're getting ready to wrap up here on this Monday, January 22nd. Excuse me. Over to our TV colleagues, Beyond the Bell. It starts right now.
Sell the news, guys. Just straight up buy the rumor, sell it.
All right, we are getting the clapping and the cheering on Wall Street on this Monday afternoon. An extension of the record high rally from Friday extends to record highs here on this Monday. And S&P 500 closing higher by about 11 points, 0.2%, 4850 and change. The Dow Jones Industrial Average also at a fresh record high, up 138 points, cracking the 38,000 level. The Nasdaq Composite, of course, still not near its record high, it's still up 49 points or 0.3%. But the outperformer on the day, you find that in Dow Transport's up 2%. You find that in the S&P 400 mid-caps up 1%, and you find that in the Russell 2000 up 2% here on the day. All right, guys, before we move on, I think we are getting earnings right now out of United Airlines. If you want to jump right to them, everybody jump in the pool here with 4Q adjusted EPS coming in at $2 a share. That is a beat. The street on average was looking for $1.69. And as far as the revenue itself, operating revenue also coming in as a beat, guys, $13.63 billion versus a street estimate of $13.5.
Yeah, quite a pop here in the aftermarket, up 1.3% here. Talking about the metrics, definitely some outperformance here. What I really, though, am kind of waiting for, and I think maybe it's going to come on the call, is I am curious about the impact from those Boeing planes and whether or not there's a great story on the Bloomberg already where the United Airlines CEO is a little frustrated by what's going on at Boeing, Alex. So I'm looking for some color around that.
Yeah, but you know, the golden measure to this is passenger revenue per seat mile, and that came in pretty solid. It missed estimates by like 2 cents, but it came in pretty solid at $16.85. And I do want to point out their full year adjusted earnings forecast SCAR of 2024 is still higher than estimate. So they're basically raising that over $10.
And remember, this is a stock that has tumbled quite a bit since Delta came out with its cautious forecast for 2024. So a lot of bad news has been priced in. So this stock move in after hours trading of up 3.5%, you got to keep in mind the context here.
Yeah, excuse me, I'm glad you mentioned Delta, Scarlett, because the entire airline industry, Roman, has been hit since Delta came out with that cautious forecast. I will say the word Boeing, the numbers 737 MAX, and the word MAX is not in the press release anywhere, but Carol, I think you're absolutely right that the questions will come from analysts on the call today about, okay, how long is this thing going to be grounded? And we know it's not up to Boeing, it's up to the FAA. The FAA says we're going to take it, you know, when it's no longer, when it is safe for consumers to fly on, that's when we'll get it back in the skies. But no question, there's frustration over this.
Hey, can I just point out, Delta looks like they're up about 1.4% in the aftermarket as well. So we're seeing some lift to some of the other players in the space.
Yeah, absolutely. United itself up about 3.5%, as you can see there, and most of the other airlines also getting a modest bid here in after-hours trading here. The overall sort of, I think, picture, though, is this idea that we are still traveling, we are still spending money on these flights, and at least for right now, there doesn't really seem to be any indication that we're going to see a significant reversal of that anytime soon.
I do want to point out, though, that they are saying that their first quarter adjusted loss per share, that band's really wide. It could be 35 cents a share to 85 cents a share. The estimate was 21 cents a share loss. I'm saying, like, watch that as we move forward, because I do wonder what the Boeing issue will sort of have on that. But you're right, in that premium cabin, even economy cabin, all saw some super solid increases year over year, Scarlett.
Yeah, compared to some of the second-tier airlines, which were struggling with domestic demand for domestic travel, United and American, they definitely benefit from the increased demand for international travel. The big question now is geopolitics and how that plays into demand for corporate travel going forward.
Yeah, I'm looking at the United Airlines press release. I'm sure you guys have done this as well, just putting in Boeing and searching, and it's so far not coming up at all, but we'll see what we get kind of made later on the call, guys.
Yeah, again, I want to go back to the idea of understanding from the company what they're expecting when it comes to the front of the plane here. I mean, that's been a big question over the last couple of years. Okay, post-pandemic, people are traveling more. Yes, we're seeing more leisure travel. There was pent-up demand for Europe over the summer. But are business travelers traveling to the same extent that they traveled at before the pandemic? With the advent of Zoom, with the use of Zoom, Romain, with hybrid work, are people getting into the front of the cabin as much as they were? Because that is where a lot of the money comes from.
It certainly is here, and at least we know anecdotally the answer to that is probably no. But the question is, the airlines, at least for right now, have found a way to sort of make up for that revenue in other ways. I guess how much of a runway do they have to continue doing that?
Yeah, I use all my miles, guys. Like it's way back to the plane. I'm sitting next to the bathroom.
Well, you better use them up soon because they're getting rid of all those programs.
I know. That's why I'm done. I'm toast. Anytime I travel, it's definitely all over.
I do just want to point out also in this release, they talk a lot about this idea of sort of cost convergence across the industry. And this has obviously been a big part of the story for keeping these companies profitable here. But they kind of paint it less as a United-specific story and more as something that's more industry-wide here. And I just think it's kind of interesting the way that they're framing that.
Do you think cost convergence refers to economy plus, that idea that in between business and economy, you have something in between where you pay a little bit more and you just squeeze out some more margin from those customers?
And you feel better about yourself because you got to do that?
You're allowed to bring a bag on the plane.
You actually can stretch out your legs?
You can not bend your knees the whole time. I don't know. It's interesting you bring that up, Scarlett. It is a product that's very popular outside of the U.S., but not necessarily economy plus, but like the, there is a real market outside of the U.S. for something that's premium but not quite business class, and it hasn't really caught on here in the U.S.
I will say, though, for the first time, and I'm trying to think the last trip, but over the last few months, taking a business trip, and seeing empty seats, which I feel like I have not seen in a long time. So I don't know what that says, whether there's some pushback and maybe people aren't, maybe the business travelers aren't traveling as much, but it was just kind of an interesting thing to notice.
Were you able to move up?
No, they don't let you move. Nobody gets to move.
Yeah.
That's called capacity. I feel like it's artificial capacity right now that kind of keeps those seats full here. Nevertheless, United now the second biggest mover, at least gainer, I should say, in after hours trading up 6%.
Yeah, just watch on the call, though, because they did forecast that worse than expected loss this quarter because of the grounding of the Boeing, and there was a great report out before their earnings crossed. The CEO, Jack Kirby, is really angry at Boeing. I'm sort of putting the angry on there, but are very upset about Boeing and the management there.
Yeah.
So they don't have a lot of choices, but still.
Like what's he going to do?
Yeah.
Buy planes elsewhere?
Well, I mean, to that point, they do actually talk about an Airbus plane in the press release. They said they took delivery and flew the first revenue flight of the airline's first A321neo.
Okay.
The new aircraft is achieving the highest customer survey results in the entire fleet.
Okay.
There's no comment about a Boeing plane getting high customer satisfaction results.
Well, yeah, because they're grounded for checks, so there's that.
No one wants to bring it up if they don't have to.
Are they
and of course
buying
they're
more
going
of those,
to have
though?
to.
That's the question.
Sorry?
Are they going to buy more of those?
There's been a lot of reporting over the last few weeks in the wake of what happened with Alaska Airlines.
Yeah.
That there used to be this duopoly and we called it a duopoly all the time, but it's looking less and less like a duopoly because over the last few years, in the wake of the earlier MAX tragedies in 2018, 2019. Customers started moving more toward Airbus. Yes, they don't have a choice. I mean, Southwest doesn't have a choice, right? It's an all Boeing fleet, for example. But there are other companies that fly both sets of equipment.
Yeah. That's it. Carol, do you have something to say here?
I
mean, usually you're pretty talkative.
All
So I was trying to give you some space.
I know. No,
Yeah.
I'm just taking a moment here. No, I'm, kind of thinking about it. I think what's interesting is there's a great thing in Pursuits, and I know we didn't really get to it,
That
but
like
it's
a physical copy
It's
that you held up?
She
I
does
still
that.
like
You've seen her desk.
I know. But anyway, it's where to go in 2024. People are still traveling. You guys have talked to people. I mean, people still want to go places. Maybe they might go more domestically if they're getting squeezed in terms of their pocketbook. Like, that's what I want to watch. Can consumers still have enough money to kind of go places, or do they stop going overseas? Or are they going to start doing more travel?
As long as you rate your miles and use them all up, then yes, maybe.
I have no miles either, Alex. I'm done. I've used them all.
TBD miles.
All right, watch the airline group in the after hours because it's definitely on the move to the upside. It's certainly something we're going to follow into the Tuesday trade. I was busy. I'm just, this great list where I want to go. Transylvania is on the list.
I saw, yeah. I gotta
Really?
make it there.
It's a real place.
That's actually,
well,
oh my gosh.
It's supposed to be beautiful, right?
Okay. Our apology for all of our travel.
Beautiful and also very affordable. Like, it's like the least expensive place on the list.
There's a reason. There's a reason. All right, guys, that's a wrap. Welcome. We love you, Alex. So fun to have you here as part of this party, our market party. That's a wrap, though. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Folks, we'll see you again tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenivek and Carol Masser live from the Bloomberg Interactive Brokers studio in New York. We are on YouTube. We're on Bloomberg Originals and, of course, on Bloomberg Radio and SiriusXM. Carol, I think I told you about this last week.
Yeah.
So some good friends over at our place a couple of weeks ago, they picked up, the dad picked up the family's holiday card, showed his family on a fall day in Central Park. Beautiful, smiling, leaves behind him. He said, "You want to know a secret about this card?"
Yeah.
I said, "Yeah, of course I want to know a secret. It's a holiday card. There are no secrets here." Right? He said, "Okay." He used Photoshop's AI feature to remove people from the photos and put trees back in place. So it actually makes them look like they were alone in Central Park on a fall weekend.
Your friend's not an expert at this stuff,
That's the thing, yeah. He's a doctor. He has no idea how to, he's not trained in Photoshop. Like, it wouldn't be that impressive if somebody
But he plays a graphic artist on the sideline.
Yeah, he said he watched a YouTube video, and then it was like, he said he called it was so easy to do. I thought it was kind of cool because, like, professional photo editing, but it's actually using generative AI, and all he had to do was like put the cursor over this one area of the photo, and then trees appear.
Well, our next guest is nodding. She is in studio. We're delighted to have with us Ashley Still. She's Senior Vice President of Creative Business at Adobe, as I said, here at Bloomberg headquarters in New York City. You're nodding because like anybody can do this now, it seems like.
Yes, that is my favorite holiday card story now. Thank you so much for sharing that, and it's great to be here. And that really just crystallizes the power of generative AI to make creativity more approachable and more accessible to everybody.
So I think the thing that I want to talk about with you, like we want to go a lot of places. We want to talk about the economy and what you're hearing from companies and sort of like the B2B side of things. But I want to talk about how you're leveraging AI in this different way, because I think there's a lot of concern right now about generative AI and it being quote unquote safe and like copyright issues. We see New York Times filing lawsuits. What do you do at Adobe to make sure that what you are providing customers with, they can then go put on their holiday card and they're not going to get in trouble for it?
Absolutely. So obviously, the creative community is incredibly important to us. You know, as you mentioned, your friend is a doctor, but many of our customers are artists and designers, and but also businesses. And so we made a decision very early in all of our research and development around generative AI to actually build our own foundational models and use our own content that we have licensed to train the models. And that really separates us from pretty much everybody else because our content is what we call creator friendly. It respects the intellectual property
So
and
if you're
copyright.
training with content that you guys have rights to, it's going to stay within that universe.
Exactly. So we don't go scrape content from the public internet. We only use, and we have a service called Adobe Stock where photographers and creators all over the world have actually contributed their content and given us a license to that. They've been compensated for us to train, to both resell that content, but also train our AI models on that content.
Take me through this decision here, because this is Adobe. This is not Adobe's first rodeo, whereas a lot of these startups, it is their first rodeo. So when did this decision happen, and how expensive has this decision been over the course of development?
Well, I mean, first of all, we've been developing AI for a decade, so we're not new to needing to think through the data that you're using to train models. We've been, kind of building that muscle for a decade. We also have been in the stock business for at least a decade, if not more. The stock photos business. And so from early on, we actually have had the rights to, and we realized probably like at least 8 or 10 years ago, that we needed to expand the idea of stock content to be not just reselling, again, for licensed content, but to be using for training. So this is actually not new.
So when you hear all the concerns and worries that are out there, do you think that there is somewhat of an easy solution in terms of the worries about kind of what generative AI can do and where it can go?
Well, in terms of copyright, I think there are choices, right? There's lots of topics around generative AI.
I mean,
in terms of copyright, I think it's about choices. There's models. So, for example, if you want to create a Starbucks coffee cup using Firefly, which is our generative AI service, you can't. Because we have explicitly never trained our models to know what a Starbucks coffee cup looks like. And so if you're, and I'll get to some of the things that we're working with companies on, we think the solution to that is to then actually just work with Starbucks if they want to create Starbucks coffee cups to extend the model with their content, right? But if you go to some of the other services in the market, they have trained on the public internet. There are plenty of Starbucks coffee cups on the public internet, holiday ones, regular ones. And so there's a lot of content that it would have been able to be trained on. So, but again, but you don't have a right to that brand.
Right.
So let's go there, because that's a really interesting development in this sort of new world. I think for a lot, not new for Adobe necessarily, but I think new for a lot of people is this world of AI. So if this partnership were to happen, who pays whom?
Oh, in terms of
you and Starbucks, for example.
Oh, well, we see that as actually a benefit to being a customer of Adobe, that we would enabled them to extend Firefly to understand, again, what Starbucks content looks like. That doesn't necessarily mean that they need to enable that for the entire world.
Right. Okay. So
it's like it's a brand extension for their use.
Oh, I see what you're saying. So for Starbucks' own use, so
Yes.
they could help create marketing materials using Firefly. Not necessarily.
Exactly.
Let's say there were somebody who was upset about a union negotiation between Starbucks and employees, creating a Starbucks image that the company wouldn't approve.
Exactly. And of course, we could look at brand partnerships to bring that content into the public version of Firefly, but that's not something that we've done yet.
Do companies want to do that, or are they scared of that world?
I think they're first trying to understand how they use generative AI for their own internal use cases. I think they're thinking a little less about, going back to your friend's holiday card example, do they want to be able to have your friend holding a coffee cup in that image? I think they're more concerned with how do we expand our marketing, how do we get scale versus, some of those use cases.
So we only have about a minute and a half here left. So I am always curious about someone in your position, right? You're working with lots of different clients, finding out what they need, what they want. How would you describe the business environment and the ease at which companies are spending right now?
I think we've been in a similar position for a while. Like, I don't think anything has.
So it's the same as a year ago, same as 2 years ago?
I think it's been the same for about a year, particularly for large companies where there's just more scrutiny of big contracts and spending, and really pressing to see the ROI of these investments. I think absolutely we've seen continued strength in digital, and a very significant portion of Adobe's business is actually through Adobe.com, and that has actually been really strong and certainly something
Stronger than it was the past 6 months or a year ago.
It's been strong throughout the past year, and particularly as you were mentioning, as we innovate in our products like Photoshop with generative fill and Firefly, we've actually seen demand for our products increase. But certainly it's both of those. I would say I've seen more scrutiny on the business side for spending and continued consumer.
But you really explained it really well in terms of the copyright, right? The information. It sounds like an easy fix if people just do that responsibly.
Well, if they started by training in the beginning on,
with just stuff that they've got approval, license, like that is pretty amazing. So easy, right? But it works. Ashley, thanks. This kind of flew, so hopefully we get to catch up with you soon in the future.
Yes. Thank you for having me.
Yeah, thank you. Senior Vice President of Creative Business over at Adobe. As we mentioned, she's here in our Bloomberg Interactive Broker Studio. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
421 on Wall Street. We do check markets all day long here at Bloomberg. We are sifting through the latest numbers from UAL, United Airlines. We've got shares moving higher after ours. UAL now jumping by 6.5%. United Airlines Holdings, though, did forecast a worse than expected loss this quarter as the grounding of certain Boeing 737 MAX planes heightens pressure on a carrier already grappling with high costs. The Dow, the S&P, NASDAQ all advanced today. S&P 500 index climbed to a new record, up 10 points, 4850, a gain of 0.2%. Dow Industrials up 138, up by 0.4%. NASDAQ Composite Index up 49. That was a gain also of 0.3%. 10-year yield 4.10% with a 2-year that's at 4.39%. Gold down $8 the ounce to $20.20. A drop today of 0.4%. West Texas Intermediate crude up 1.8%, $74.55 a barrel. Bitcoin, right now, we've got Bitcoin trading just above 40,000. Was trading for much of the day below that threshold. Right now, Bitcoin is at 40,101. So again, recapping, stocks higher, S&P up 10, a gain there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, everybody, you don't see this a lot these days. Someone spending their entire career at a single company, but that's exactly what our next guest did. After 33 years at Dow, Howard Ungerleider, he retired back in November. He oversaw Dow DuPont split into 3 separate public companies. We're talking about Dow, DuPont, and then Corteva. I hope I'm saying that correctly.
Fair to say, Carol, he's seen quite a few cycles and quite a few changes through his career at the chemicals giant. Howard Ungerleider joins us on Zoom in New York City. Howard, good to have you with us. Why did you retire?
Hey, Tim. Good afternoon, Carol. Thank you. Somewhere in the suburbs of Philadelphia, my mother is smiling if she's listening to that nice introduction.
We hope she is.
Look, 33 years is a long time to be doing anything, and I just felt like it was the right time to continue with my leadership journey. You know, I just arrived in New York. All of my ancestors actually immigrated from Eastern Europe. My grandfather worked at a dry cleaners for more than 50 years in Brooklyn, and he instilled in me a work ethic around pressing pants. And I still remember early days. He's long since passed away, but when I was first at Dow more than 33 years ago now, he used to call me and ask me at the end of the day, how many pants did I press? Because that was his view of hard work. And that's what he instilled in me. And I did that for 33 years. And it was time to look where my leadership journey is going to take me next.
Do you have a favorite moment, though, within that 33-year journey at Dow specifically?
Oh, my goodness. 33 years, it seemed like every year was something special. Certainly, the investor relations role that I did in the financial crisis, I took that role in April of 2008. We announced acquisition of Roman Haas in the summer. Lehman collapsed in September, and we all know what happened after that. So, the old adage of what doesn't kill you makes you stronger. I learned a lot about myself. I learned a lot about our great company called Dow through that period of the financial crisis,
I still love that you went there, because I always think that is a time when the CFO, that position was no longer about the earnings call or quarterly earnings report, only just that, but it became the CFOs kept companies alive and figured out the balance sheet and what they needed to do. And I just feel like from that day forward, CFOs meant something very different.
Yeah, Carol, I couldn't agree more. Actually, my joke at the time was there were no equity investors. Everybody was a fixed income investor. They all wanted to ask about credit and risk and mitigation and trying to find where the bottom was. Now, that's 15 plus years ago now. But I actually think you bring up a great point. The role of CFO, I really think, has evolved dramatically over the last 25, 30 years. If you go back into the 90s, the best path to the CFO seat was most likely treasurer, a deal maker, a lot of M&A experience. Through the early part of the 2000s, after Enron and Sarbanes-Oxley, it really became an accounting-driven, compliance-driven, control-driven role. And I would say really the financial crisis was the beginning of, I think, the evolution as CFO as co-pilot. You know, I am not a pilot by training, but I use that analogy because I think it's really apropos. The CFO really has to be the co-pilot of the enterprise today. And you think about what a co-pilot does is they have to do everything that the pilot does. They may not have, they have one fewer stripe on their shirt sleeve, but they have to be able to land, take off, talk to the crew, work with air traffic control, navigate the plane, you know, engage with the clients or the customers or the passengers. They have to be able to do everything the pilot does. So really, CFO as co-pilot, I think, is what this generation of CFOs really needs.
Howard, I'm going to break a rule that I should not break, but I just can't help myself right now. I'm still stuck on this idea that, you know, your grandfather would call you early in your career. And I just, out of curiosity, is there any chemical that you worked on or anything you oversaw while you were at Dow? Like, does this story come full circle that he would have used or that dry cleaners end up using in their process?
Yeah, 111 is the perchloroethylene. It's a product that Dow no longer makes, but it's not really a product that dry cleaners use today obviously for environmental reasons. But back 30, 40, 50 years ago, that was the molecule of choice for most dry cleaners. So he definitely used that at the time. But that's a long time ago, Tim.
But you said they're no longer using it?
Right, correct.
Is that how come?
I mean, in terms of environmental footprint, there's molecules that are safer today that are better for the environment and better for the clothes. And safer.
Well, can we go there for a little bit? Because we thought about this when we were kind of planning. You know, it feels like one of the next industries already or will be on many people's radar is plastics, and really the chemical industry is role in this. And you know the report that came out earlier this month, I think Columbia and Rutgers, about the detectable plastic fragments in a typical liter of bottled water, some 240,000. We've been talking a lot about microplastics and nanoplastics and how they're so much more dangerous. You know, I think about The Graduate, the movie, and there he is in the pool, and they're like, what are you going to do with your life? And they're like, plastics. So how are you thinking about, having spent so much time in that industry, about what's the constructive conversation to have as we maybe move forward to, and probably should move forward to, you know, a continually cleaner world that doesn't impact our environment so much?
Yeah, and I'm not here speaking on behalf of Dow because I'm no longer with the company. But what I would say is I think where the industry is heading, and Dow is certainly right there front and center, is decarbonizing the value chains and driving for circularity. Plastics actually is the most sustainable alternative. It's more sustainable when you look at it on a total carbon life cycle perspective than paper, than metal, than glass, or other packaging substrates. The challenge is most of it today, unfortunately, is not recycled, and it goes into the landfill. And so by driving decarbonization, meaning reducing or eliminating the use of hydrocarbons to make plastics, using other materials as raw materials, as feedstocks, then driving circularity so that those materials, once they're transformed into a plastic or a polymer or packaging use or durable good use, don't go into the landfill, but actually get reused and recycled. I mean, that ultimately will really benefit the planet.
But does it not get recycled because it's just not cost efficient to do so?
Yeah, it's more cost efficient today, unfortunately, to use virgin hydrocarbon resins and virgin polymers. So what we were advocating, and what I would still support, is some kind of a market-based price on carbon. That's not something that currently is happening in the United States today. It is happening in other countries around the world. Canada, our neighbor, for example, does have a market-based price on carbon. And if you implement a market-based price on carbon, that will encourage and financially incentivize people to actually do that recycling.
But what about the idea of these plastics actually getting into our bloodstreams through microplastics? Now nanoplastics is the study that Carol was referring to that we talked about on our air a couple weeks ago. That's something that's relatively new to me and that we're just learning about now. How do you think about all that?
Yeah, I think we need a lot more scientific study. I mean, that's really, we need to let the science drive the answer. And I mean, I would say that's the biggest thing that we can do as a society.
So would you say there's not evidence for that at this point?
No, not significant, no.
All right.
Interesting.
Yeah, so we're going to continue talking. I know we kind of went off a little bit, but it's certainly been top of mind, because it's certainly something that we've been thinking about here a lot in 2024. But we want to talk a little bit more about some of the macro issues and evolution of the C-suite. And we're really curious because we both have been doing a lot of reading about kind of where you want to go or what's next, because you're not kind of done yet.
Sure.
So we're going to continue with Howard Ungerleider. He is former president and chief financial officer over at Dow, joining us on this Monday. So we're going to get back to that conversation in just a moment.
Hey, I'm taking a look at shares of United Airlines right now. They reported in the after hours. Shares in the after hours, Carol, as we wait for that conference call to get started, are moving higher as we speak, up about close to 6%.
Yeah, we're seeing Delta pop too, up about 2.5%, getting hammered, right, in the last week or so because of concerns about its outlook. So definitely keeping an eye on it. Having said that, time to check on news.
Yeah, let's go to World Nationals. We've got Nancy Lyons in the Bloomberg 999 newsroom in D.C. I'll try to get that out, Nancy. How's it going?
Thanks, Tim. Well, marking 51 years since the Roe v. Wade Supreme Court decision on abortion, President Biden today is putting abortion rights in the forefront, saying his administration is taking steps to have contraception covered by insurance and to guarantee access to abortion in medical emergencies. We hear more from Bloomberg's Irv Chapman.
President convened his task force on reproductive health care access, which heard from doctors threatened with prison under state laws.
The idea a woman who receives competent medical advice that the fetus she's carrying wouldn't live, it will impact on her ability to have children in the future, is can't get medical care. The cruelty is astounding. We're fighting hard to protect women and families and doctors who care for those women. We need the American people to keep making their voices heard.
The president said if the next Congress enacts a national right to abortion, it would be constitutional under the current Supreme Court's doctrines. In Washington, Irv Chapman, Bloomberg Radio.
New Hampshire voters are weighing their options ahead of tomorrow's primary. Donald Trump and Nikki Haley are the lone Republicans still in the race. Haley has a lot of ground to catch up if you listen to the polls, so she's taking aim at Trump.
Everybody talks about the economy that Trump gave us and how good it was. And it was. But at what cost? He put us $8 trillion in debt.
Trump today picked up an endorsement from Republican Congresswoman Nancy Mace, who represents the state where Nikki Haley once served as governor, South Carolina. Today was supposed to be the final day of E. Jean Carroll's defamation trial against Donald Trump, but the proceedings had to be postponed due to illness among the jurors and the former president's legal team. The Trump team wanted the delay to last until Wednesday, and that request was granted. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Another day of records for the Dow, the S&P, and the NASDAQ Composite Index. 10-point gain in the S&P, up by about 0.2%. Today we had the Dow up 138, higher by 0.4%. The NASDAQ Composite Index up 49. That was a gain of 0.1%. 10-year 4.10%. The 2-year 4.39%. A retreat for gold today, down 0.4%. 2020 the ounce. A retreat as well for Bitcoin, back below 40,000. 39,890 right now on Bitcoin. And West Texas Intermediate crude up 1.9%, 74.63 for a barrel of WTI. Bottom line here, stocks saw gains again today, closing at fresh records. Traders are weighing strong economic signals and prospects for corporate profits amid warnings that the market has run too far too fast. Nancy Tengler is Chief Investment Officer at Laffer Tengler Investments. And right here on Bloomberg Business Week, she told us she is not overly concerned by the prospects of a steep pullback for stocks.
Once a year, we get a 10% correction. I think that would be healthy. But remember, 2 years, the NASDAQ's actually down through the end of last year on a trailing 2-year basis. And compared to the 90s, Microsoft was trading at 51 times peak earnings. It's trading at 30 times. So don't tell me this is frothy, out of control valuation.
And you can hear more of the conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Archer Daniels Midland shares plunged today after placing its chief financial officer on leave and cutting its earnings outlook pending an investigation into the agricultural trading giant's accounting practices. Today we saw shares of ADM down 24%. Recapping, stocks higher, S&P up 10, a gain of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here on Bloomberg Business Week. We're talking with Howard Ungerleider. He is former president, chief financial officer at Dow, and he's joining us on Zoom in New York City. One more thing, I want to kind of go back to what we ended on, Howard, if I may. And I was just thinking about all those things, and you've been really wonderful in just kind of going with us on it and talking about it. But I think there are a lot of industries out there. Like I think about, I spent a big chunk of my career like watching what happened with cigarettes and the settlement, pesticides, sugar, trans fats, lead, asbestos, mercury, red dye number 5, talc.
Johnson & Johnson and talc, yeah.
Yeah, exactly. Although that settlement, no wrongdoing, to be, just to be fair and transparent. There are so many things we learn years after we've been using them that they're bad for society, for individuals. So at the same time, so much that companies do that have improved our lives in immeasurable ways. How does the chemical industry, though, adapt to kind of an environment where we are looking to make sure that we're not impacting individuals, not impacting the environment? Carbon credits are one thing, but we want to make sure that we're actually not creating harm in the first place.
Sure, and I think, it's a great question, Carol and Tim, and I would just say that I think, spending 33 years of my career at Dow, it was all about the science, right? And and science, technology improves, analytics improve, and the industry, at least coming from a Dow perspective, has improved over the last 30 years in a significant way. And, you try to use the best available data and analytics and tools and technologies to develop the right polymers. And there are many chemicals that used to be used decades ago, which are no longer used because we found much safer molecules in order to be able to deliver the products and the features and the benefits that we as consumers like. And I would just say that we've got to continue to do that as an industry and frankly as a society.
Love that. So then let's go a little bit further in terms of what you do next. And I think I read somewhere where you want to make an impact or continue to make an impact. And it could come in a couple different ways, whether it's CEO of a publicly held company or private equity. When you say impact, what do you want to do specifically, Howard?
Yeah, I mean, so let me start with what I am doing. So I've signed up as an operating advisor for CD&R, based here in New York. I'm also on the board of Kyndryl, which was the IBM spin out of the managed infrastructure business a few years ago with Martin Schroeder and David and the team there at Kyndryl, and I'm enjoying both of those roles phenomenally well. Creating long-term value for all stakeholders is what I would say gets me very, very excited. I mean, dealing with complex three-dimensional problems and challenges and working to create long-term value, not just for shareholders or the owners of a company, but really, and what I learned in my 33-year career is you have to invest and create value for all of the stakeholders. That's your customers, the communities in which you operate, and the citizens and the ultimate end consumers, depending on where you are in the value chain. That's what I'm focused on.
Would you consider going full-time in-house somewhere and as a CFO or CEO?
Sure, I would. I mean, I'm having lots of interesting conversations, as you'd imagine. I mean, I promised myself, a lot of the people that I've spoken with that I respect, they say, you can say yes to every conversation, but don't say yes to anything full-time for at least 6 months. Give yourself a little bit of grace. Give yourself 6 months to really refresh and hit the reset button. So I'm doing just that. I'm having lots of conversations, but I will tell you, I really am enjoying the CD&R folks. I'm enjoying being on the board of Kyndryl, and I'm really enjoying the conversations that I'm having above and beyond that as well.
Hey, Carol and I were talking earlier in the day about Archer Daniels Midland. I don't know if you saw this news. I know you were traveling today, so forgive me if you haven't. But Archer Daniels Midland plunged 24%, the most ever in a single day, after the company suspended its CFO and cut its earnings outlook pending an investigation into its accounting practices. We should note, that's what we know so far. No wrongdoing has been there's no wrongdoing being accused of anyone at this point, but there is an investigation going on. Just as a CFO, a former CFO, how do you read into something like that, like news like that?
Yeah, look, all I know is what I read on Bloomberg on my phone on the way from the airport, so I can't comment on that specific issue. What I would say, though, in terms of being a publicly traded company or any company in the United States, U.S. GAAP accounting is the Bible. It's a combination of the Old Testament, the New Testament, the Quran. Pick your favorite religion. You have to abide by U.S. GAAP accounting. That is table stakes. Now, if all you do is focus on the GAAP accounting, then you're not likely going to create long-term value for stakeholders. But you have to start with GAAP accounting. It all starts and stops at GAAP accounting. You have to do that. So I would imagine we'll see what happens over the next few weeks and months as that story unfolds.
This has been great because we've been covering so much that's kind of going on in our news today and kind of some of the big narratives, if you will. Having said that, politics is a big narrative, and we know we've got the New Hampshire primary underway. Politics. How do you believe global CEOs, U.S. CEOs should be planning for the outcome here in the United States come November?
Look, I think businesses have to go through many different political cycles, right? If you're going to be successful over the long term, you're going to outlive an individual elected official if you're doing the service for the industry. When I think about 2024. Certainly the economy, what I heard Janet Yellen talk about the other day was that, declaring success and a soft landing. I hope she is right. I hope we are dealing with a soft landing. With that said, it's never been done yet. So what I would say to fellow CFOs out there or people who are running companies is, prepare for a choppy 2024. Prepare for a 2024 that looked a lot like 2023. I think for the most part, certainly in the upstream parts of most value chains, destocking is most likely over. It's an open question on whether that destocking will come to an end or continue to extend in some of the downstream consumer-oriented areas.
Right.
But I think, hoping for the best, but preparing for something less than the best is what, I always try to do, and certainly what multiple crises, whether you go back to the financial crisis that we were talking about or the pandemic, you have to do scenario planning. You have to have a plan A,
Howard,
but then a plan B and C.
We have to run. Do come back. It's one of our favorite kind of conversations. Howard Ungerleider, thank you so much.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. A partnership with Dave Portnoy's Barstool Sports is powering shares of video platform Rumble higher. Rumble shares rallied today by 36%. Alaska Air says it began inspecting door plugs in its Boeing 737-900 ERs several days ago and says it does expect to complete the remainder without disrupting Alaska's flight operations. Stock did today was little changed, down less than 0.1%. Delta, meanwhile, says it also took, quote, proactive measures to begin inspecting its 737-900 ERs, but has not commented on the results. Delta today down by 0.8%. Arkhouse Management has asked Macy's for access to more financial information after the department store operator rejected a $5.8 billion takeover offer from investment firm Brigade Capital Management. More from Bloomberg's Steve Rappaport.
Charlie, the investors made a $5.8 billion or $21 a share offer for the company last month, and Arkhouse is threatening to take its offer to shareholders if the department store chain doesn't step up negotiations. The offer represents about a 19% premium to Macy's closing price on Friday. Macy's board says it will not enter into a non-disclosure agreement or provide any due diligence information to Arkhouse and Brigade. Macy's has struggled to compete as shopper preference has shifted away from department stores, with online retailers making inroads in key merchandise categories such as apparel and home goods. Last week, Macy's said it would lay off about 3.5% of its workforce and close 5 stores. Charlie?
And that's Steve Rappaport reporting. Macy's shares did advance today by 3.6%. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenevec and Carol Masser live from the Bloomberg Interactive Brokers studio in New York. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. It's a day before the New Hampshire primary, and former South Carolina Governor Nikki Haley is taking aim at the only other candidate remaining in the Republican race, Donald Trump.
When you hear Trump speak, what's he talking about? Grievances? The past? He's talking about vendettas?
Haley spoke at a campaign event in New Hampshire today. Former President Trump is picking up another endorsement from South Carolina Congresswoman Nancy Mace. She says her state backs Trump, not Haley.
Overwhelmingly, they are with Donald Trump. We've had 4 years of weakness in the White House. They don't want 4 more years of weakness in the White House under Joe Biden. They want 4 more years of strength. They want 4 more years of peace.
As for New Hampshire, the latest polls show Trump still leading Haley, in some cases by double digits. Marking 51 years since the Roe v. Wade Supreme Court decision on abortion, Vice President Harris today kicked off a nationwide Fight for Reproductive Freedoms tour, focusing on abortion rights. Harris told a crowd in New Hampshire, freedom is not given or bestowed.
It is ours by right. By right. And that includes the freedom to make decisions about one's own body, not the government telling you what to do.
Harris was speaking in Wisconsin. President Biden is honoring 2 Navy SEALs who are presumed dead after going missing off the coast of Somalia. One of them fell into rough waters. The other jumped in to rescue him during a special mission to seize Iranian missile parts that were heading to Yemen. Biden said today the sailors, quote, represented the very best of our country, pledging their lives to protect their fellow Americans. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Tim and Carol.
All right, Nance, thank you so much. A headline crossing the Bloomberg terminal. Scott Stuber, who built Netflix into Hollywood's most prolific movie studio, will leave the streaming giant in March to start a new company. He's going to stay on, though, as global film chairman at least until the Academy Awards in March to wrap up some projects before departing to produce films and TV shows on his own.
Okay, well, he has secured financing for the new venture. That's according to people familiar with the executive plans. Chief Content Officer Bala Bajaria will oversee the film team while the company searches for a replacement. This from our own Lucas Shaw at Bloomberg News.
All right, just quick check. I'm seeing if the stock's moving in the aftermarket. Dun, da, da, da. Come on, baby. Down about 0.7%.
Okay.
So just a little bit.
Hey, you know who's here?
Doesn't mean anything. Doug Krisner.
Doug Krisner. And, you know, he and Brian Curtis have a new time for Bloomberg Daybreak Asia. It's tonight at 8 p.m. Doug, how are you?
I'm doing well. How was your first day of the new format?
It was great.
New schedule.
Great.
How lucky were we? I mean, the news came down. We did not know about the Fed's Inspector General weighing in.
Right. Rob Kaplan, right?
Yep.
Of all days to have that.
And Rosencrantz.
News
formerly of
coming.
the
Eric
Boston.
Rosencrantz.
And we have
Bill Dudley.
former head of the New York Fed.
And what did he have to say?
He said,
Did he dwell much on this?
we talked about it a little bit, but basically, you know, the bottom line, it turns out that they didn't do anything like criminal, or it sounds like.
So they were trading during a period when they were Fed presidents, right?
Correct. But I think his point was the rules have been changed.
Exactly.
And so